Welcome to the daily update, where I'll go over the action in the market for Friday, September 22nd, and then we'll see how things look for Monday, September 25th. I might sound a little bit different since I'm in another location to record. You might not even notice a difference. We ended up having another down day. On Thursday, we had a pretty extreme down day that took us down to support. A lot of our short-term indicators were looking oversold, and it looked like maybe we were due for a bounce. And in Friday's session, the market tried to do that, but by the time we ended up closing, we broke down below the August 2022 high, and we're switching even more negative, but we continue to be oversold on a short-term basis and a little bit in the intermediate term basis. So let's go back and talk about what happened. Right at the open, we had a higher open, and prices were above the daily pivot at 43.45. We didn't quite get up to R1 at 43.61. So the upside was really limited. Then we fell back down to the daily pivot. As the day went on, prices tried to bounce, but then we fell below the daily pivot and then down below the unchanged level. Prices tried to find support at the August 2022 high, but there was an attempted bounce that failed at the daily pivot, which now became resistance. Prices closed at the low, but we were just a little bit above S1 at 42.98. We were down 0.23%, not that much on a percentage basis, but we're seeing some technical damage being done. The long term is still holding up for right now. It's the short and intermediate term where there's some more issues. Volume dropped back down to below average, and the technicals, I'll go over that more throughout the video, but we're more negative in the short and intermediate term, but we're also getting to an oversold condition, and it has to do with this continued recovery over, okay, the Fed said this, we're going to have to shift things a little bit. We haven't been able to develop a rosy scenario yet, so we're going to turn things more negative. And then you have with that the negative seasonality that we're in, not only for the month of September, but in the latter part of September, it tends to be weak as well. And so we're seeing some pressure on the markets right now. Some comments. The S&P did close below the August 2022 high. That had been providing support before. It didn't on Friday's session. Now we're not too far below that. We could always recover it, but for right now, after a negative week and then on the weekly charts, it's going to make things look more negative technically. San Francisco Fed President Daly, not sure how to say that, came out, who is a voter in 2024. Didn't really directly say this, but inferred that the Fed may have some more tightening to do. This FOMC, the Federal Open Mouth Committee, they just love to talk. And I don't know what the thing is. Do they feel like they get some thrill if they can say something that then spooks the markets? I don't know. They're just not really supportive right now. And then you had Boston Fed President Collins, who's not a voter this year or in 2024, as well as Governor Bowman, who is a voter. They made kind of similar comments. I don't know if they're trying to prepare the markets. It's really kind of strange right now. But the market reacted to this together, and it wasn't a real positive reaction. The Bank of Japan, who met on Friday, they didn't make any changes to their policy stance, and that was pretty much as expected. So on a short-term basis, our list is still pretty long. We had a few things drop off, but we had the CMB Composite Index, the 20-period exponential moving average, the Stochh RSI, the Williams Percent R, the CCI 14 and 20, the stochastics, the force index, the standard deviation chart, the percent B, and the boom indicator, as well as the RSI 9. So a pretty long list. Now, these could still continue to fall, especially since we closed below support, but they are giving us extreme negative readings, and I'll show you the charts of these. We did see on an intermediate term basis a little bit of an oversold or extreme negative condition. The McClellan oscillator, which should have been on this list yesterday, it's now added. That's the one for the S&P. The NYSE McClellan oscillator still has more room to fall, and then the PMO studies are starting to look rather extreme. And we're still wondering about this scenario. This was developed weeks ago now, that the economy is stronger than expected and that the Fed will keep rates higher for longer. Okay, the market's known that. We've been dealing with that. What we heard on Friday was this idea that perhaps they're going to have to raise rates, and the market didn't like that. They're dealing with the higher for longer scenario, but they're hoping that we've topped out at this point. We're also keeping an eye on the Chinese economy, and then oil has been going up lately, and that's producing inflation concerns. The dollar was up, which gave some headwinds to stocks, and it's doing quite well. It's up into the 105 range. But interest rates, after really spiking up on Thursday, they came down a bit on Friday. The yield curves that we follow are still inverted. Now we're starting to see some bounce up from these inversions, but they still remain inverted. And sentiment is more negative now at 36, where it had been at 40. Our trend is now negative. We're just beginning with a trend where we're crossing above the moving average, both with the short and intermediate term ADX, but we're still below 20. And as I keep saying, if you're more aggressive, you might take advantage of us going into a downtrend. If you're more conservative, you might want to see more confirmation of that by possibly seeing the ADX continue to rise or, in fact, go above 20. And I'll show you the chart. Our bias is negative because we're having a down day, and then we had a Thursday was a down day as well. And our momentum, the last 2, 3, 4, 5 days have also been negative. The economic reports that came out, nothing all that influential. We had the S&P Global U.S. Manufacturing PMI, the preliminary reading. It came in at 48.9, which was up from 47.9, but it's below 50. So it's showing on a manufacturing basis that we are contracting. Then we had the services PMI, which is a little bit above 50, so showing a slight growth or expansion of the economy. It came in at 50.2, but down from the 50.5 that we saw last time. And here's the manufacturing PMI showing how it's below 50, even though it has been improving. And where we're above 50, but we're showing a little bit of a decline with the services PMI. We're keeping an eye on the 10-year yield. It's still above that 4.02%. And once we get above that, based on this research from RenMac, it suggests that this is going to put some pressure on earnings for stocks because it costs more to borrow money. Here's the intraday chart where we did have a higher open. Not much of a gap, but we went above the daily pivot, never quite got up to R1 before coming back down to the daily pivot. And it looked like, okay, maybe this will provide some support before we get set to go higher. Nope, kind of fizzled out. And then we dropped below the daily pivot, came down to the unchanged level, which tried to act as support, fell below that, came down to the August 2022 high. We did see a little bit of a bounce going into the latter part of the day, but we stalled out right at the daily pivot, and then we saw some selling going into the close. Here's the intraday chart of the growth and value, where they're both going down and they were both negative. So this is more of a broad-based decline that we're seeing in the market. Here's our growth versus value ratio for the SPY intraday. This is a little bit positive. Even with the down day, we were up. So growth did outperform value. But we've seen this before and kind of latched onto this as something positive, only to have it fail in the next session. So we'll just have to see how this plays out. On an end of day basis, we also saw a little bit of a tick up, but we've been shopping sideways since about the early part of March. However, we're still in a longer term uptrend. We're also watching the VIX. This blue line is the average from 1990 up to 2022. We have now been going up with the VIX. And are we going to continue to do that? This will top out, at least on an average basis, at about the middle to latter part of October. Looking at the VIX, where we declined just a little bit with the line chart and the bar chart after we saw a pretty big upward move in Thursday's session. We're also seeing volatility decreasing slightly as things calm down a little bit on Friday. The VIX to VVIX ratio is starting to turn back up, and that is turning more negative. And we're also starting to go back up with the 5-period simple moving average of the equity put call ratio. That is more negative as well. We had been spiking above this 0.8 level, and then we started to come down, but now we're starting to go back up. And then longer term, we continue to go up with our 253-period simple moving average of the equity put call ratio. So we're not really getting much support from the VIX to go higher right now. The VIX to move ratio is also still spiking up, showing that stocks are much more volatile than bonds right now. The Ulcer Index continues to be above the moving average, showing that fear is increasing. Then looking at the advanced decline line, we are dropping based on price. We're still above the moving average, but we've dropped below the moving average based on volume. The new highs, new lows. We saw a real expansion of new lows as we were going lower in the latter part of the day. And that's turning our 5 period down, and our 10 period is starting to go below this midpoint. The advanced decline ratio also showing that we're negative with the blue line and the red line, and this still has further to fall before it gets to an extreme reading. This is also negative. The smart money, it looks like they're selling right now. We're below a declining moving average. And the chicken money flow, another smart money indicator, it ticked up just a little bit, but continues to be quite negative. At some point, we might hit an extreme negative reading where we might find some support from that, but it doesn't look like we've got to that point yet. The cumulative NYSE advanced decline line, we're breaking breaking below this previous low, and we're coming down and possibly challenging this previous low. And we're also going below the trend line that had been sloping upward, and that is showing more negativity. We're also seeing a break below the trend line with the other NYSE advanced decline line. We're seeing more weakness now with our risk on versus risk off ratio. That is now falling, and that is negative. Here's the ADX, where the red line came down just a little bit, but the green line continues to decline. The ADX is above its moving average, so we're seeing a strengthening trend, but it's still below 20. Shorter term, also, the red line was down, the green line declined. We're above the moving average, but we're still below 20. So a trend is possibly developing. The daily chart showing some damage here where we came up. This was a previous high, which then acted as support a number of times, 2 times here. Well, it was kind of hoped that maybe we would bounce up off of that. The fact that we closed down below that is more negative. And if we continue to fall, we might start to challenge this upward sloping trend line going back to the October 2022 low, which I have another chart which also shows this trend. On the bottom, we see where volume did drop below average. The Stochh RSI is still extreme negative, but it can stay here for a while. And the Williams percent are also extreme negative. It can stay there. The CCI 14 is extreme negative, and the CCI 20 also extreme negative. And we're starting to drop below this extreme negative reading with the 20 period exponential moving average. We're also going down with the 50 and the 200. So we're looking more negative. We're also underneath this short-term rainbow. We fell below it on Wednesday and then really on Thursday, and we went a little bit more below it on Friday. The stochastics were extreme negative with the short term. We're extreme negative in the intermediate short term. We're still negative in the long short term. The force index, we're coming down to this Keltner band here, showing that we've gone down pretty far, pretty fast, and we really didn't work that off in Friday's session. The boom indicator is also based on the 20 period moving average, starting to get to an extreme negative reading. We're not there yet with the 50 and 200. If we continue to fall, we may hit those levels. But the 50 and 200 are declining. We're below the midpoint with the 50. We're still above the midpoint with the 200. But if we see more weakness, this will also turn more negative longer term. The go-no-go system still remains negative with the deep purple bars. The CMB composite is still extreme negative. I use this more like an oscillator, and we might see some kind of a bounce out of this, but it didn't really happen on Friday. The highest high, lowest low values, we're dropping down. The red line is turning down, where the blue line, which is the positive highest high values, that's flatlining sideways, and we're starting to roll over with the midpoint, so turning more negative. The TTM squeeze is also turning more negative. Balance of power also below the dash line and declining, that's negative. The bullish percent index also showing a continuation of weakness as we drop below 50. This is measuring the internal strength of the S&P by looking at the number of buy or sell point and figure signals. This means that the point and figure sell signals for the stocks in the S&P are increasing with those signals as the buy signals are decreasing. We're extreme negative with the S&P McClellan oscillator, so our summation index based on price and volume continue to decline. The summation index for the NYSE, we're declining based on price and volume, and not as quickly as the S&P 500, but it's still negative. The Elder's Impulse system for the S&P continues to be negative. The mass index, we're kind of flattening out right now. We're wondering, has the signal been generated, and is that to the downside? What we'll want to see is if we get some kind of a bounce, what will the mass index do in reaction to that? The idea behind this indicator is that once we go up to the blue line and then drop below the red dash line, whatever is happening at that point, we're looking at a reversal. Well, as we were getting this signal, we were going down for a period and then up for a period. So that left us kind of confused as to what's going to happen. The PMO, which is a momentum oscillator, is turning more negative. We're also declining based on price and volume. We also do a number of studies with the PMO where we're getting extreme negative with the PMOs that are rising. We're declining with the buy signals, and we're also declining with the PMOs that are above zero. We're declining with the Swenlin trading oscillator, both based on price and volume, and not extreme yet. We're declining with the NYSE bullish percent index. We're below 50. And we're also declining with the NASDAQ 100 bullish percent index. So we're really seeing a lot of weakness here. We also dropped down below the Ichimoku cloud, and we're still below that. So right now, this support level has not held. All of our oscillators are negative. We're down in the short, intermediate, and long term. We're also still underneath the 100 period moving average and declining. So that's turning more negative. The standard deviations chart, we're in the third standard deviation. We're starting to roll over. We're seeing all of these purple lines begin to go down, and we're below a declining midpoint. And we're below the open, high, low, close study that we do here. And the parabolic SAR is still negative. We're dropping below the intermediate term rainbow chart. We're not seeing the lines start to roll over yet, but the longer we stay below this, the more they will roll over. The ease of movement is also below zero and declining. That's negative. The Arun, which had switched over to negative after Thursday, is continuing to decline after Friday. The red line is the sellers, and that's at the top. That means they're the ones in control. And we're seeing the green line here decline, which are buyers. And so when you take the two together, the oscillator is giving us a negative reading. Here's the 100 period moving average, where we fell below this S1 level, and we continue to be below that. We're also seeing a decline with our 200 period moving average study of the S&P. We're also declining with the 50 period moving average. Now, we came down to this area before and bounced around a little bit, and then we're able to come up out of that. So we'll be watching to see if that will happen this time. The percent B indicator has now spent 2 days being extreme negative. Typically, we'll just get 1 day and then things will turn and go the other way. Well, we're still in this extreme negative reading for right now because we closed outside of the lower Bollinger Band. The RSI on 14 periods is declining, but we're still extreme negative with the 9 periods. So that's shorter term negative or extreme negative. And here's the Fibonacci chart where we broke below support and closed it, not only on a daily basis, but also on a weekly basis. So this is not looking all that healthy. Does that mean that we're going to continue down to one of these other levels? And we're also coming down to this other 61.8% retracement level. So far, this level is holding, but are we going to be able to bounce up off of that, or are we going to fall down through it? The financial sector has been seeing some short-term weakness after generating a golden cross. And the microcaps getting closer down to that 100 level. We're going to see if it can stay above that, or is it going to fall down below 100? We're turning more negative with the 150 and 200-day moving averages. And here is this other trend line going from the the October 2022 low to the March 2023 low. Are we going to come down and test this? There, you can make a real case for that. And then if this holds, we might get a nice bounce up out of that. Or if we break below it, that's going to turn things more negative. But it's going to take a few days for us to try to work this one out. On a longer term basis, looking at the weekly chart with the MACD, we are declining with the S&P 500. In our different variation of charts, we're turning more negative with the Heiken Ashi, also negative with the Kegi, negative with the Renko, and negative with the 3-line break. The equal weight index is underperforming the S&P, but they're both really going down right now. And we're coming down to the S1 level with the Dow. We're still above the 200-day moving average, so that's giving us a little bit of hope. And we're also negative with the diamonds and coming back down to this previous low. Will that hold? NASDAQ 100 also still has a little bit more room to fall to come down to this previous low. Will that hold if we end up testing that? But we did close down for 2 days now below this S1 level. And we're negative with the Elder Impulse system for the QQQs. We're also negative as far as momentum. We were seeing some hope here with the PPO starting to go back up and go above zero. Well, now it's rolling back over and going below zero. NASDAQ 100, we're still a ways away from this, the 61.8% retracement level. But if we keep falling, we'll be watching to see if we hit this. The NASDAQ also still down below this S1 level, below the 50-day moving average, but still above the 200-day moving average. The NASDAQ also coming down to this 50% retracement level. If we come down to that, will it end up holding? The FANG index, which had held up quite well last week, it dropped below its 50-day moving average and continues to show more weakness, even though it was virtually unchanged on Friday. The small caps are where we're seeing a lot of weakness. We did see more of a continuation being down 0.31%, but we're still above this S2 level. We're below the 50 and 200-day moving averages. We're looking even more negative here with the Russell 2000 small caps. We're getting extreme negative with the RSI, but we've really dropped below the 200-day moving average, and the MACD is also negative. The small caps for the Elder Impulse system still remain negative. The mid caps, which had been holding up, fell below the 200-day moving average and saw some more weakness on Friday. Where the Elder Impulse system for the mid caps is still red, so that is negative. We're seeing a continuation of a decline with the Dow as well as the transports and the utilities. And we saw a bit of a pullback with the 10-year yield where it came back down after really spiking up on Thursday. And based on price, where we really gapped lower, we saw a bit of an improvement, but based on price, we continue to be negative. Tom Bowley's research for the month of September, we're at the latter part of September where we tend to see some weakness. So what's our outlook for Monday? We're still dealing with earnings reports, but they're kind of few and far between now. The UAW strike is still continuing, and we're still trying to see how that's going to play out. And then the writers' strike, which they're seeing some hope coming out of that. That's more based in Hollywood. And that gave some bounce to some entertainment stocks, at least on Thursday. We're still wondering, are we going to see a government shutdown? That's a political posturing that's going on here. We'll have to see how that works out. And then at the beginning of October, student loan repayments will be restarting, which could put a drain on the economy. Our technicals are negative right now, and we're still looking at this as a developing trend. If you're more aggressive, the trend has already developed. We won't get any economic reports on Monday, and we'll be keeping an eye on all the different geopolitical events. But right now, it's about inflation, interest rates. What is the Fed going to say? And is some kind of a new scenario going to develop? Here's the calendar for the upcoming week showing that we'll get a lot of real estate information. We'll get the FHFA Housing Price Index on Tuesday and the Case-Shiller also. Consumer confidence will be coming out. We'll get durable goods. That can be a big one. We'll get the GDP third estimate. That's only going to be big if it's really drastically different than what we've already seen. And then the big report's going to be PCE prices on Friday. That's another inflation report. For September 25th, looking at the Stock Traders Almanac, we're beyond the options expiration time now, but we're neutral to negative with the Dow, S&P, and NASDAQ. And we'll be on the 16th trading day of the month where sometimes we see some weakness before we see a little bit of an attempted bounce and then some more weakness going into the latter part of September. According to Carson, we just see continued weakness. Here is the NASDAQ during a pre-election year where we're seeing some weakness in the latter part of September. Also seeing some weakness for the S&P during a pre-election year. We're only up 33.33% of the time, going back to 1950 during pre-election years for the S&P. So our scenarios, you could lean more towards the downside. We're clearly more negative right now. We're just wondering, is this going to develop into a stronger downtrend, or are we going to find some support and be able to bounce back up? You could lean more towards the sideways trend for right now, because going with the uptrend is just not supportive of that currently, because the ADX is still below 20. So again, if you're a little more aggressive or a little more conservative. So our warning signs, the longer term trend signals on the weekly S&P and NASDAQ 100 chart, we're breaking further below those trend lines. We're in a weak seasonal and historical month, as well as a weak period within the month. The equity put call ratio is going up. The long-term equity put call ratio is also going up. The risk on posture is showing weakness. Our S&P 500 oscillators are negative, and the NASDAQ oscillator that we've been following is also negative. The cumulative new highs, new lows for the NASDAQ are showing weakness. We're still above the 3-month yield where we were back in 2007, waiting to see if that's going to roll over. The S&P is underperforming utilities. These got switched from the positive side, and the Staples to S&P 500 ratio is advancing. So that is more negative for the S&P. The Russell is below its 200-day simple moving average, and we're wondering, has it created a head and shoulders top? The parabolic SAR chart is negative, and the vortex is negative, and we're still dealing with earnings season. The positive signs, way in the background, we do have seasonality and setups that I'll go through in the weekly video. The daily special K chart is still positive. The weekly chart is negative. We're still above the downtrend channel upper line. The Russell, the small caps, and the mid caps, even though they're seeing a lot of weakness right now, did generate recent golden crosses. Small and mid cap growth is still positive, even though it's chopping sideways. The financial sector, as I showed you, has generated a recent golden cross. So our conclusion, we're negative in the short and intermediate term with a trend developing. In the short term, we're negative and we're becoming still more oversold. In the intermediate term, we're negative and also seeing a few indications of being oversold, but we're still positive in the long term. Thank you. I hope you found this helpful. I will be posting other videos over the weekend. I hope you have a really nice weekend, and I will talk to you in the next video.